Hello, day trade here. I'm just going to make a little video here to summarize results of a past option trade, as well as show a new one that I just closed out yesterday. And the strategy is called a risk reversal. The initial one was with Apple, and the last one that I just completed was with Hudson's Bay in Canada. So the first one I did last year at the beginning of the year, 9 months out. And it was a risk reversal, which is selling a put and then subsequently buying a call with some of the proceeds. In this case, I did it on Apple. While it was trading around $101, I sold a put at $100, bought a put with also a strike of $100. So the net cost was only $164.98. And the potential upside was unlimited depending on how high Apple would go. At expiry, Apple closed at $116.60 on October 21st, so that gave a profit of $3,155.02, or an over 2,000% return. Now, had it had a little longer to play out, we all know now Apple is over 130, so it would have worked even better. So I decided to use this same risk reversal strategy with Hudson's Bay. On January 10th, I sold a put and bought a call, selling a put at the strike price of $10 and buying a call at the strike price of $11, while Hudson's Bay was pushing around all-time lows. So again, I saw limited downside and basically unlimited potential upside, or at least significant potential upside. And the trade actually provided a net debit of $27.52. So with this strategy, the only risk is on expiry, if the stock trades below the strike price, so in my case $10, I would have to buy 500 shares of Hudson's Bay at that price, which I was more than okay with given the stock's recent decline and the valuation I thought it deserved. So this had 5 weeks to expiry. The break even was $9.95, and you can see my trades there. I sold for 40 cents a contract and bought for 30 cents a contract. As a result, again, receiving more money than I was laying out. And the result, just closing yesterday, was that HBC closed at 12.17 for a profit of $827.52 with no money down. Now you can't calculate return as a percentage because I didn't have any money actually invested into this trade. I actually received money for it, but it was still 2,000% based on the $27.52 amount. So even had it cost me $27, I still would have made over 2,000% on this trade. So again, very, very high reward for very limited risk. That's why I like this option strategy of a risk reversal. If you're able to find a stock that's trading at reasonable valuation where you don't think there's a lot of downside, but there is a lot of potential upside, which I saw with Apple and I saw again with Hudson's Bay, as they had a lot of retail asset value there that it's believed they will try to unlock in the near future. If you're interested in getting more trade ideas where I shared this strategy initially, as well as just my general bullishness on Hudson's Bay when it was getting into the $9 and $10 range, I have a chat where members can discuss with myself and others, chat ideas daily, and they'll be shared in real time. And there are also many other features such as an options calculator, dividend calculator, daily newsletter and watch lists and summaries of the overall market, stock screeners, upgrades, downgrades, and much more. So if you're interested, you can go to my website and sign up or contact me for more information. Have a great long weekend.